Hey guys, welcome back to the weekly recap. This one's big. We've got oil prices spiking like crazy after the latest Israel-Iran conflict, shopping costs are through the roof, central banks are getting nervous, and everyone's watching the Middle East again. Let's break down what actually happened this week and how it's shaking up the markets. So, things kicked off around June 13th. Israel launched strikes on Iranian targets and oil prices immediately shot up. Brent crude jumped over 7% in just one day. It briefly hit $78.5 before pulling back a bit when there were rumors of talks. But no talks happened, and prices went right back up. By June 19th, oil was sitting at $78.85, the highest we've seen since January. For comparison, before the conflict started, it was under $70. That kind of volatility has ripple effects. Energy stocks go up, airlines and shipping companies take a hit, and central banks start worrying about inflation all over again. Bottom line, geopolitical tension in the Middle East still has the power to shake up global markets almost overnight. Now, let's talk about shipping. Even though no ships were hit, the cost to insure a vessel going through the Strait of Hormuz jumped by over 60%. Why? It's a high-risk zone now. Everyone's nervous about missiles, drones, or cyber attacks. Insuring a $100 million cargo ship used to cost around $125,000 per trip. Now it's closer to $200,000. And here's the kicker. About 20% of the world's oil goes through that strait. So if shipping costs keep rising, guess who pays for it in the end? Yeah, all of us. That means higher prices for fuel, goods, delays in delivery, and more pressure on supply chains that were already under stress. Meanwhile, in the UK, the Bank of England decided not to touch interest rates this week. They're holding at 4.25%. Why? They say global uncertainty, especially high energy prices from stuff like this Israel-Iran situation, is just too risky right now. So they're playing it safe. Inflation in the UK is still above target at 3.4%, but growth is weak and jobs are starting to slow down. They don't want to cut rates too early and make inflation worse. Markets now think they'll probably start cutting in August, and again by the end of the year. So what does this mean for you if you're watching from the UK? Mortgage and loan rates might not drop just yet. The pound could stay strong short term, but the economy is still on shaky ground. It's a slow, cautious approach which honestly makes sense right now. So to sum it all up, oil prices are jumping all over the place. Shipping insurance is getting pricey, and that hits supply chains. And central banks like the Bank of England are holding steady, waiting to see how this plays out. We're in one of those weeks where one regional conflict sets off a chain reaction across everything: oil, inflation, freight, central bank decisions. Stay informed, stay flexible, and as always, thanks for watching. If you found this useful, hit that like button, drop your thoughts in the comments, and don't forget to subscribe for more updates like this. And let's build the bridges together, not burn them.